D Ram Reddy, Managing Director, Balaji Amines, joins us now. Let's take a conversation forward to understand from him what are the demand trends and the price trends are there in the entire pharma API segment. Good morning. Thank you for joining us. Could you walk us through what essentially is happening to the specialty chemical stroke the amine business, given that we've seen a lot of volatility in the global pharma stroke API space?
See, there was some problem with the Pharma and API, including Agro also was not doing well past few months. That has given very bad impact all the chemical, specialty chemical industry, including Balaji Amines. And now we are seeing there is an improvement in the last 1-2 weeks. And with my personal view, we expect in the another quarter, maybe first quarter of the next year, there should be the good improvements as the some of the raw materials are getting stable, like methanol, ethanol, and ammonia prices have come down. Unlike earlier months, they were somewhere 80-90 rupees, which has come down to 60 levels. We still expect it will come down to another 5 to 10 rupees, which will give some leverage to the chemical, specialty chemical, and in turn into the API and pharma industry also.
So let's understand both the aspects. Why did prices and demand drop? And what has changed, which is giving you confidence that the worst is behind?
See, we can see only the improvement in the takeoff in our material. Some of the customers started talking the increased volumes. That gives some indication for us. There is some improvement in the pharma API market side. It's all over world, not only with India. If you see the various sector parts of the world with the pharma API industry and agro industry, which were not doing well, almost 5-6 months we have seen very bad patch for this industry. And actually the pharma API, I've seen some of the numbers where it is down by 40%. The utilization is gone below 60%. Almost 40% impact was there in the pharma side, in turn, which has given impact to the chemical and specialty also. And as I said, we have seen some of the key raw materials for the pharma API, they started moving little upper side than the comparatively earlier months. So this shows some indication, and going forward, we expect in the one quarter, at least the next end of the next quarter, we should see some normalization in the utilization point of view.
So, given the fact that you're talking, Mr. Reddy, about the trajectory for getting leverage on account of the falling input prices, where can we then see your overall margins headed?
See, we have seen very bad patch for the standalone, and if you see the consolidated, our numbers were stable, almost 27, 28 EBITDAs we have maintained on the consolidated basis. And we think that there should be improvement on the standalone basis, and overall it should be somewhere 24-25% should be guaranteed for the coming quarters.
All right.
The other thing I also wanted to know, given that 25% of your revenues are currently coming in from exports, are there concerns around slowdowns, cost-cutting measures, considering what's happening within the Western economies and countries?
We have seen, because the exports, what we have seen from some specialized products, where the demand is still, what they call in Europe, you are right that they have selected the products which are to be run, which are to be stopped. And luckily, the products which we are exporting to the European countries, they are considered as a priority sector. So like 2-3 products we export to the Europe and including China also. We are exporting few products. So they are in the consistent demand. We see that it will continue for the coming 1 or 2 quarters.
Okay. And with China reopening, any kind of deterioration that you expect in prices?
I don't see. We have seen the rather improvement in the prices because of the improvement in the raw material prices. we see some improvement in the prices, stability, rather I can say stability should be there in the coming quarters.
Right. Okay. Great to have you on the show then. Thank you so much, Mr. Reddy, for taking the time out and speaking with us today.
Yep.